Yes, let's continue the topic on depreciation. Previously we completed section 30 and 31. 30 and 31 talks about deductions towards buildings, deductions towards plant and machinery. In both the cases, revenue repair is allowed as deduction, insurance is allowed as deduction. In case of buildings, property taxes is allowed as deduction subject to 43B. The deductions are based upon if the SSC incur, he can claim in case of accrual. In case if the SSC is following cash basis of accounting, then only payment is the criteria. That's what we understood. And in case of a tenant of the building, rental amount paid is also allowed as deduction. That's what, right? 3031. Now, let's begin depreciation. In PGBP, if there are some 2 or 3 topics which are tough, one such topic is depreciation. Actually, depreciation is not a tough topic, but a slightly confusing topic, especially when problems were given. Many students compute depreciation wrongly if multiple adjustments are there in the problem. Getting it? But we are going to crack that entire code. Like, you cannot compute a wrong answer in depreciation if at all you understand the depreciation in the way I'm telling you. There is no possibility of wrong answer at all. Only right answer you get. Always you get only right answer. From now, immediately after depreciation concept is over, we'll be simultaneously solving the questions from our question bank. Okay? So, in our question bank, we have 1 minute. We have questions. We have questions directly from, you can see here, income from PGBB 133. Yes. So, the first problem itself is on depreciation. So, directly from now, depreciation problems also we are going to solve. So, entire depreciation, you see the provision almost 4 pages, almost 6 pages almost. One section, mainly predominantly 32. Almost 6 pages discussion. 5 pages I can say. But I will make it as simple as possible. Now, first, in order to understand depreciation under income tax, first let us understand how depreciation works in accounting. Normal in our generally accepted accounting principles, normal in our businesses or in books of accounts. You might have already solved some problems on depreciation, right? It's not new. How do we claim depreciation in normal? How do we calculate depreciation normally? If any asset is purchased, capital asset, some fixed asset we purchased, on which date we install, from that date you will claim depreciation, correct? Suppose in the first year, like I asset newly purchased, first year I installed it on, let us assume 10th October, correct? 10th October to 31st March, because generally we close books of accounts on 31st March. 10th October to 31st March, whatever number of days is there, for that many number of days we calculate depreciation, correct? So opening value 0. Opening value is nothing but purchase cost minus depreciation for the current year reduced, then you will get closing value. That will be the opening value for the next year. Again, you will calculate depreciation depending on WDV method or SLM method as per your choice, correct? In normal accounting, you calculate depreciation asset wise. Whereas in income tax, the depreciation is calculated block wise. What is it called as? Block. Block is nothing but group of assets. Block is nothing but what? Group of assets. Under income tax, we follow an approach called block of asset approach. We follow an approach called block of asset approach. What do you mean by block of an asset? Block of assets refers to assets falling under same category and carrying same rate of depreciation. Assets falling under same category of the asset and same rate of depreciation. Assets falling under same category and carrying same rate of depreciation. This is called as block of asset, which is explained under section 2 clause 11. There is a section 2 clause 11. There is a section that explains what do you mean by a block of asset. Assets falling under same category and carrying same rate of depreciation is called as a block. For example, You know how many categories we have, in income tax? Broadly 4 categories. In income tax, the assets are broadly categorized into 4. Intangibles. First category is what? Intangibles. See, actually, as per the law, numbering might be different. But for understanding purpose, I'm telling you like this. 4 categories were there. What are they? Intangibles. Okay. Then we have buildings. Then we have furniture and fittings. Then we have plant and machinery. Then we have, there are only 4 categories. That's it. Any asset you buy, they should be categorized into these 4 categories only. Any asset you buy, you have to classify them into 4. I purchased a mobile for business. Where should I classify in these 4? In these 4, you logically think and tell me, where should I classify? From whatever these 4 categories, observe and tell me, mobile I purchased, where should I classify? Plant and machinery. Why? Because mobile is not an intangible. Mobile is not a building. Mobile is not a furniture. Is this the logic you applied indirectly? That's the definition of plant and machinery. That's the definition of plant and machinery. Plant and machinery means other than furniture, other than building, other than intangible is nothing but what? Plant and machinery. Computer I bought. Ceiling expenditure, interior, furniture. Interior generally comes under furniture. Interior is something decorative. Anything that is decorative, convenience, comfort, that is generally coming under air conditioner. Plant and machinery. Yes or no? Wooden structure. Building. Wooden structure for accommodation. Buildings. Wooden structure for accommodation. Buildings. You see, Kerala boat houses will be there. Where it will come? Buildings. It will come under what? Building. Building may be a block, concrete based or cement based or brick based or wooden based, doesn't matter. It all comes under building. I have a patent, purchased a patent. Intangibles. Easy. So assets falling under same category. And we understand right now itself, we are ships. What about ships? Ships. Plant and machinery. Plant and machinery. Boat house is different, ship is different. Maybe there are possibilities that boat house, maybe if at all we may have to see the real case on that. Maybe they may classify it as building, or they may mostly they will classify, because primary purpose of the boat is for staying. If the primary purpose is for to stay, like a premises we are using, generally we classify it under building. Roads, bridges, building. Anything which is immovable generally comes under building. Aircraft. Suppose a company bought a chartered plane. Plant and machinery. That's it. You are done. Category means you understood it thoroughly. That's it. So aircraft, anything that is not a building, anything that is not a furniture, anything that is not a building or intangible, is straight away we classify that as what? Plant or machinery. That's it. Okay. Now okay. Block of asset, first category. Category means what we understood. Assets carrying same rate of depreciation. Another condition is what? Same rate of depreciation. What do you mean by rate of depreciation? What do you mean by rate? So we have given you what are the rates of depreciation. We have given you in one of the page what are the rates of depreciation. You see, rates of depreciation we have given. Found out? Rates of depreciation. Yes, you see here. And if you observe, I have given numbering, you see here. All intangible assets, they all carry what rate of depreciation? 25. Sir, whether it is a license, a trademark, a copyright, a patent, a goodwill, doesn't matter. But remember, on goodwill, depreciation is not available right now. From 2021 financial year onwards, up to 1920 year only, depreciation goodwill is allowed. But later on, depreciation on goodwill is not allowed. By the way, when I say intangible, is it self-generated or purchased? Generally purchased. That too, goodwill, self-generated value is 0. We generally consider self-generated goodwill value as 0. But remaining any other copyrights are developed. Some cost I can find easily. You might have understood this in accounting standard. Yes, yes. So for all intangible assets, they all carry same rate of depreciation. Now tell me whether it is patent, whether it is copyright, whether it is trademark, tenancy right, anything, any intangible asset, if all of them are carrying same rate of depreciation, suppose I have 10 intangible assets, all of them are carrying same rate 25. Should I group them into multiple blocks or single block? Exactly, single block. That's why you see intangibles, how many blocks we have? Only one block. Now coming to buildings. Buildings means what? Buildings may be used for residential purpose, or buildings may be used for other than residential purpose. Arre, residential. I am doing business, no? Why residential? Staff quarters. What is it? Staff quarters. Factory comes under non-residential, correct? Factory building, office building, they come under non-residential. Staff quarters, residential quarters, that comes under residential building. But at the end of the day, both are used for business or profession of the SSA. They are ultimately used for business or profession. Suppose if I have a building which is my personal, I am not using business at all, I am not doing business at all inside that. Will it come under income tax PGBP head? A building comes under PGBP head. An asset comes under PGBP head only if that asset is used for business or profession. Agreed or not? Now in buildings, how many blocks were there? 3 blocks were there. Why 3 blocks were there? Because 3 rates of depreciations were there. Because 3 rates of depreciation. On buildings, there are 3 rates of depreciation. What? Suppose if the building which is used for business is used for residential purpose, then the depreciation rate is 5%. If the building is used for non-residential purpose, 10%. Suppose if that building is for water supply or treatment, if it is for water supply or water treatment, or it is a temporary wooden structure kind of, then it is what? 40%. Then the depreciation is straight away 40%. Able to understand? All of you? Now coming to furniture. Furniture, electrical fittings, lights, everything will be there in ceiling, lights, ceiling, everything, that lightings, everything. They are all called as what? Electrical fittings. Fans, lights, everything we call them as what? Electrical fittings. All electrical fittings we will categorize into one asset and capitalize generally. All electrical fittings, we treat them as single asset and then capitalize. Suppose one classroom is there. I need to ready a classroom. I took one skeleton. Skeleton in the sense I took a classroom, no decoration, nothing. What we did, we bought 100 lights in the classroom. Round lights, ceiling lights, we bought 100 lights. We bought some 20 fans inside that class. We incorporated some fittings and all. Getting it? All that costed me approximately, let us assume 2 lakhs or 2.5 lakh. That entire put together I will capitalize. I will not capitalize fan number 1, fan number 2, fan number 3, fan number 4, fan number 5. No, I will not do that. Electrical fittings, we call them as electrical fittings and furniture. All electrical fitting, all furniture, whether you call it a sofa, chair, dining table, doesn't matter. They carry straight away 10%. Since for furniture only 10% rate is there, how many blocks will be there in the furniture category? Only 1 block. How many blocks are there in building category? 3 blocks. How many blocks were there in intangibles category? Easy. Yes or no? Now coming to plant and machinery. In plant and machinery, 5 blocks are there. Why 5 blocks are there? Because 5 rates of depreciation is available. For machineries, how many rates of depreciation is available? 5 rates. Therefore, 5 blocks are possible. Assets fall under plant and machinery. Assets fall under plant and machinery. Not every asset have same rate. They have different rates. How many variations are there? 5 variations are there. That is why how many blocks in plant? 5 blocks. If you open ICA book, they gave mistake. This block presentation, they did a mistake. They mentioned this is block number 1, block number 2, block number 3, block number 4, block number 5. Like that they mentioned. That's wrong. That's absolutely wrong. Suppose you look at this block called block number 3. What is block number 3? Plant and machinery. What is the rate? Rate applicable for that block is what? 40%. Okay. Now in this block, what are the assets there? aeroplanes, pollution control, life-saving equipment, renewable energy device, computers including computer software, which is most important in this, books, whether owned by professionals or used in libraries. Are you getting it? Whether your professional books or library books, whatever it is, they all carry what rate of depreciation? 40. By the way, books are there, right? Obviously, it will come under plant and machinery only, because it is not furniture, because it is not building, because it is not intangible. So naturally, it comes under. Exactly. Now you see all these assets, they all come under 40% block. Means what is block? In all these cases, we don't calculate depreciation asset wise. We don't calculate. I purchased a phone. I will not calculate on phone separately depreciation. I will first add this in block. In the block, on the block value, I will compute depreciation. How to compute? Little while later we'll discuss. Until now you understood. Then another block is there, which is block number 4, which is plant and machinery, ships, all water based. They all carry at what rate? 20%. Then we have another category. We have another category called block number 5, plant and machinery 15. But before coming to that, look at this. Block number 1. Any cars purchased between 2019 August to 31st March 2020. What is the block? What is the rate of depreciation for those cars? 30. Buses, lorries, taxis. Taxis means what? It may be car, but used for renting, plying, hiring, renting. Then what is the rate of depreciation? 30. Semiconductor industry equipment. Some semiconductor technology, some companies will be there which are manufacturing semiconductor chips and all. So for them, 30%. Suppose if I have a normal car for my business purpose, I am not renting it. What is the rate of depreciation? That comes under 15%. Yeah, date is important. Okay, but the date irrelevant, not required. If at all car is purchased during 2019 to 2020, August 2019 to 2020, some 7 months, 8 months, some 8-9 months period. Only during that period, if you buy a car, normal car, use it for your business purpose, not for renting. You are not doing car renting business. Car renting business always 30% depreciation for them, because commercial cars, commercial purpose means automatically the consumption will be very high. Wear and tear is high, so depreciation is also high. Sir, normal cars, sir, for my business purpose, sir, general cars, sir, what is the rate of depreciation? Rate of depreciation is 15% for general car. But if the car is purchased for general purpose, but purchased during August 2019 to March 2020, then depreciation is 30%. Are you getting it? That date is not so relevant. Okay, that year 2020, 2021 time, that time these questions were asked, because that time it's a latest amendment. Now it is not relevant, because for you the questions are going to be based on 24, 25. So generally they won't ask. Are you confident? Now, suppose if I buy a car, suppose mine is a car renting company. We bought cars. What is the block? Block rate of depreciation is what? 30%. We bought, sir, I am the owner of car trading company, sir, but I have a car which is for my traveling purpose, business purpose. I am not renting this car. Then on that car? Exactly. Are you getting the point? Next, renewable energy devices, windmills, turbines. For all this, what is the rate of depreciation? I have some phones, sir, mobile I bought, sir, two-wheeler I bought, sir. Okay, some machineries I bought in factory. No list is given above. It is not covered in the above specific list. What is the rate of depreciation? Any other plant and machinery. What is it called as? Any other plant and machinery. What is the rate of depreciation? 15. Are you getting it? If at all a machinery is, if at all an asset is there, that comes under plant and machinery category, but we cannot classify above rates, then on that what rate is applicable? Exactly. What is the rate applicable? 50. Air conditioners. Do they give any specific list here? Here, which is taxable at, sorry, which is depreciable at 15%. Able to understand? All of you? Now, in the same period, buses, lorries and taxis purchased, suppose in the same August 2019 to 2020, 45% is the rate. If any buses, lorries and taxis which were purchased for commercial purpose, commercial and obviously bus and all used for commercial, will I use bus daily? No, right? Yes or no? So buses and all were used only for commercial. What do you mean by commercial purpose? Yellow plate. Cars will have number plate, right? That number plate, if it is yellow, generally across India, this is what followed, yellow. Then that is said to be what? Commercial purpose. Then that is generally said to be commercial purpose. Getting it? Sometimes electric cars were there, no? Electric cars, no, they always have green plate. But even if the electric car is used for commercial purpose, that is also will have green only. So commercial purpose or not, you should clearly ask the SSC and then check. Generally, yellow plate is the criteria for commercial purpose. Are you getting it? Suppose a company director, company gave a car to director for daily traveling, office works, all that. That is not commercial purpose. Commercial asset means what? That asset is used for renting it. Are you getting it? Then only it is called as a commercial car. Correct? Of course, at the end of the day, I am using for my business. That is also commercial purpose only. The moment I am using a car for business purpose, it's a commercial purpose. But that's not a commercial car. Commercial car means what? The car which is used for renting, hiring, leasing, playing. Correct? We bought a car for our business purpose. Dropping the directors at home, for company purposes. That is not commercial car. That will have only white plate. Able to understand? All of you. So anyhow, if a general car is purchased between 2019 to 2020, 1920, that carry 30%. Commercial taxis and all purchased during that time carries 45%. Normally they carry 15 and 30. Normally car carries what rate of depreciation? 15. Commercial purpose? 30%. Easy or not? All of you? Yes. So now in exam, what you should remember? In this, what you should remember. I will highlight this. Okay. This one, semiconductor industry equipment, pollution control equipment, computers, books. Okay. Pollution control equipment, computer, books. Okay. Now again you see one more observations. Solar renewable energy devices, windmills, if they were installed before 2014, 15%, but now the latest rate is what? 40%. This you remember. Renewable energy devices, windmills and solar turbines, for all of them right now, what is the depreciation? 40%. But if they were installed before 2014 means right now they would have been depreciated already. So this point you need not remember. Correct? Now you should remember these two. Any other motor car which are for general purpose, any other plant and machinery, they all come under 15. So these rates you should mainly focus on. Of course, buildings, second point, and furniture, of course, and intangibles. Getting it? That's it. Able to understand? All of you? Easy. Renewable energy devices, solar panels, all that, they carry what rate of depreciation? Normally 40. If at all they were purchased before, if they were installed before April 2014, remember here installation date is relevant, not purchase date. When they were installed is important. Suppose a windmill is purchased, a turbine is purchased, which is almost some 25 crore cost. It was purchased before 31st March, before April 2014, but it was installed in September 2014. 40% is the rate of depreciation on that asset. Are you clear? All of you? Now in problems, how they will give you, generally in reality or even in the problems that we are going to solve, how they will give you, some car purchased for 40 lakh. Okay. Mobiles purchased for some 20 lakh for various directors put together. Okay. We purchased mobiles. Okay. Solar panels purchased by the company. What is it? Solar panels purchased by the company. Solar panels approximately costed 1 crore. Then we even purchased air conditioners for our office, which is approximately 35 lakh. Air conditioners costed approximately 35 lakh. Okay. Then books also we purchased, because our entity is a lawyer's legal firm or an audit firm. Okay, we purchased books, approximately 5 lakhs worth of books we purchased. Now I want you to identify how many blocks were there in this, how many number of blocks were there, how many blocks were there in this, identify. And I also want you, what is the depreciation on each block? What is the depreciation on each block? How much? How many blocks were there? and what is the depreciation on each block. What are the block? Let us name the blocks. Block number 1, plant and machinery, 40% category. Don't name it as solar panel block. It's what category? But carrying. And there is another block called, that is also plant and machinery, but carrying. Exactly. You should name blocks names. No, it is not asset name. Block names are only 4 names possible. Intangible block, furniture, building, plant and machinery. No, sir, plant and machinery have multiple blocks, sir. That is why rate also you mentioned. So that block 40%, block 15%, block 25%, plant and machinery only. Are you getting it? You should not call it as computer block. You should not call it as ships block. You should not call it as aeroplane block. Are you getting the point? It's a plant and machinery block carrying different rates of depreciation. Now, so plant and machinery 40%, only 1 crore will come. Multiplied by what rate of depreciation? 40%. What is the depreciation in block number 1? 40 lakh. Very good, very good. Yes. So here actually how many were there? Books were also there. 1.05 crore, correct? 1 crore solar panels and books multiplied by 40% is equal to 42 lakh. Correct? Depreciation is how much? 42. But what about block number 2? Car 40 lakh, mobile 20 lakh, AC 35, 60 plus 35, 95 lakh into 15% is equal to 14 lakh 25,000. That's it. How simple it is. This is how you should compute. PGBP, I mean 32 depreciation is over almost. Still it is there, don't worry. It's not that easy. But you understood the basic provision. Basic provision is over right now. Now, you know what will happen. Now tell me, depreciation in normal accounting, what we know is, we calculate depreciation based on number of days used. Correct? Correct? In income tax also, depreciation is calculated based on number of days. In income tax also, we calculate depreciation based on number of days. But there is a slight variation between under income tax and other than. Normally in accounting, how you do in accounts and how you do in income tax, there is a slight variation. By the way, one variation we know. In accounts, we calculate depreciation asset wise. But in income tax, we calculate depreciation. Suppose if I purchase any asset during the year we purchased and installed. Tell me one condition. Before installation, can I claim depreciation? Can I claim depreciation on machinery which I have not installed? You can't. You cannot claim depreciation if it is not installed. Why? It's not ready for use. Sir, installed, sir, but I didn't switch on. I installed it, but I didn't switch on. Generator we installed, sir, but we didn't use it. Still you can claim, because usage includes passive usage. See, as a fundamental point, you can claim depreciation on any asset only if it is used for business or profession. Used means what? Actually switched on and then must be used. Or if installation is done, that is enough. Installation is done. Installation is done. It's ready to use. Just to switch on, it is ready. If it is ready to use, that is enough. That is enough. Even in accounting also the same logic. Even in our accounting under PPE, Ind AS also, or accounting standard also, the same logic. Income tax also same logic. But in income tax, we calculate depreciation block wise. There we calculate asset wise. But in this year, we purchased a machine or we purchased some asset. It's part of some block. But that asset is used for less than 180 days. Less than 180 days, you see. How many days I have used it? Less than 180 days. Then on those assets, no value will be there, right? You will directly claim depreciation at half rate. You will directly claim depreciation at half rate. Directly half rate. Sir, for example, no. I am actually, which year I am doing? 24-25. Right now I am in 24-25 year. Let us assume 1st March we purchased an AC. 1st March we purchased an AC. Approximately 10 lakhs we invested in air conditioners and installed also. 10 lakhs worth of air conditioners installed. Generally in accounting, no, up to 31st March means 31 days only, right? In accounting, how we will calculate depreciation? 10 lakhs multiplied by rate of depreciation to 31 by 365. But in income tax, number of actual days is irrelevant. Is it used for less than 180 days? Yes. Then 10 lakhs multiplied by 15% multiplied by half rate means 1 by 2 you should multiply. 10 lakhs multiplied by rate of depreciation for this asset is under income tax. Let us assume it is 15%. Let us assume rate of depreciation is 15%. You know, cost is how much? 10 lakhs. But you cannot claim full depreciation. You can only claim half depreciation. Therefore, 75,000 is the depreciation answer for this. Sir, but you know, I used it for 180 days or more than 180 days. I used it for 180 days in the year, sir, or more than 180 days in the year. Getting it? In such a case, I can claim depreciation at full rate. I can claim depreciation at full rate. On the same 10 lakhs, how much I will get depreciation? 15% is equal to 1.5 lakh. Are you clear? All of you? But depreciation calculation is not as simple as I teach here. This is of course important logic. What is the logic here? Tell me, for example, last year I purchased an asset. Last year I purchased an asset. Last year I did not install it at all. Last year I did not install it at all. Okay, or else I'll do one thing. I'll come back to it later. At that point, a little bit difficult. Slowly we'll come back to that point. Last year we purchased an asset. That year it was used for less than 180 days. But this year also we are using it for less than 180 days. Last year I used it for less than 180. This year also I'm using it for less than 180. What about this year? What about this year? Full rate. Less than 180 days, more than or equal to 180 days. This question comes only for the first year in which asset is installed. This condition will come only for first year in which that asset is purchased. Sir, I purchased this year, sir. Then only how many days you used, we will ask. Once you installed, whether you use it or not doesn't matter. No, throughout the year it is installed already. Correct? Huh? Once you installed, we assume that you are using it throughout the year. When you installed is important for which year? First year in which that asset is purchased. So 180 days logic, more than 180 days logic is relevant for first year. It is not relevant for second year onwards. Sir, in 23-24 year, I purchased a mission, sir. I purchased a mission. In that year, no, I installed it on 5th October. I installed it when? 5th October. Oh, you installed it on 5th October, which means the asset is ready to use from? Which date is important for us? Purchase data, ready to use data. Ready to use, installation date, ready to use date, passive usage date, correct? It is ready to use from 5th October, which means from 5th October to 31st March, it is ready to use only. Whether you switch it on or not, I'm not bothered. It's ready to use. Yes, it is ready to use. When it was ready to use, 5th October itself, it is ready to use, sir. So 5th October to 31st March, how many days? 179 days. How many days exactly? 179, exact 179 days from 5th October. Are you getting it? Okay, from 5th October to 31st March, since it is exactly 179, which means less than 180, 10 lakhs is the mission. Rate eligible for that block is 15%, but half only you can claim. Are you getting it? Are you getting it? Sir, I installed it on 4th October. I installed it on 4th. You will claim full depreciation. Are you getting it? Fine. This 180 days logic you understood. Now, what if, and by the way, in income tax again, what is the method of depreciation we follow? That is one more thing. Method of depreciation. We understood, okay, depreciation is calculated group of assets wise, block wise we understood. We understood that if a asset is newly purchased and installed and used for less than 180 days, then it is only eligible for half depreciation. Otherwise, it is eligible for full depreciation. All that we understood. What method of depreciation is important? What method of depreciation we should follow? This is the question. What method of depreciation? We have two methods of depreciation under income tax. One is SLM method, another one is WDV method. You know, I told you block of asset, right? Block of asset approach is applicable only under WDV method. SLM is available only for power sector. For whom? Power sector. Power sector means what? A company which is engaged in generation of power, or generation, storage and distribution of power, or distribution of power. Are you getting it? You see here, I will show you that, don't worry. You see, for power generation undertakings, power generation, your company is engaged in what? Electricity manufacturing. If your company is engaged in electricity, you can calculate depreciation on what basis? SLM basis also permitted for you. But you know what? For power sector, this year only you started business. First year you started business, you purchased so many windmills, so many you purchased for generating power, thermal power, hydro power, so many you have projects. First year, this is your first year of business. In the first year itself, you should tell department, you should choose whether you want SLM method. SLM means what? You know, again, asset wise. SLM, if at all we go SLM, no. Power sector, no. If at all they choose SLM method, no. Depreciation will be calculated asset wise. Block of asset concept will not apply. Block of asset concept will not apply. But less than 180 days, more than or equal to 180 days, that logic we can still apply. Are you getting it? If at all yours is a power generating company, first year, this is your business itself is in first year. Now itself, at the time of filing IT return itself, you should tell income tax department which method of depreciation you want to follow. Tell. You want SLM asset wise, go. If you don't want that, come back to block of asset WDV method. Sir, my company is not in power generation, sir. My company is a normal sub-manufacturing company, or mine is an IT company, sir. For me, always depreciation method is what? WDV and block of asset approach. By default, every SSC comes under block of asset method WDV. Even power sector also WDV block only by default. But in the first year of their operations, in the first year of their business, they should specifically choose SLM if they want to. Suppose if they did not choose, by default, what is applicable to them? Block of asset approach only applicable to them. What method is applicable? Block of asset approach only applicable. WDV method only applicable. Correct? All of you. Now, what is a block of asset approach? How to calculate depreciation under block of asset approach? Depreciation computation format. You can even put in the bracket under block of assets method. What is it? Under block of assets approach or block of assets method. Depreciation computation format under what method? Block of assets method. Okay. Now you know. Tell me, first year of business na, I purchase every asset newly. You know very well, more than 180 days or equal to 180 full depreciation, less than 180 half I know. What about opening value? Second year onwards, it will be in the opening value, right? WDV method means, see, there is a difference between WDV and WDV method. WDV method means it's about depreciation format, depreciation methodology. WDV means what? Written down value. Written down value means what? Generally written down value means what? Opening value minus current year depreciation is equal to WDV. Correct? Generally written down value means what? Written down value means opening value minus depreciation. Accounting language I'm talking. Written down value means what? After depreciation, what is the WDV? Opening written down value means what? On opening date, what is the written down value? Closing written down value means what? Generally, what is the difference between opening written down value and closing written down value? Current year depreciation. Accounting, correct? But in income tax, WDV has a different meaning. Of course, it's written down value only. Generally in accounting, written down value means after depreciation value. Agreed? But in income tax, written down value means before depreciation. In income tax, that too under block of asset approach, written down value means before depreciation. Suppose no, in the problem they told you WDV as on 31st March of 2024. WDV as on 31st March of 2024, 10 lakhs they give. Will it be the same? Will it be opening WDV as on 1/4/2024? Can the same be called as opening WDV for 1/4/2024? No. WDV as on 31st March 2024 means generally it is called as before depreciation. Sir, I want to calculate opening value, sir. Then how to calculate? From the closing WDV which is there in the last year. Reduce depreciation applicable for last year. Then you will get closing balance of block and that will be the opening balance of the block. Fine. Let's hold this WDV point for a while. We will again come back to it. Okay, we will again come back to it. Now let's understand how to compute depreciation. Under which method? WDV method with the block of asset approach. So, you know what they're saying is, so you know, if it is, suppose you know, I newly started business, opening balance will be there 0. Newly started business means so many additions will be there, right? What is this second point? Add. For opening balance, what we should add? Actual cost of assets acquired during the year. By the way, this format is the right depreciation format. Will it be done for all assets together? Blockwise? Exactly, blockwise we should do this. This depreciation computation is generally done blockwise. Means this format you should always apply on how many blocks is there. For that many blocks this format is applicable. You should calculate depreciation blockwise. Suppose if I have 5 blocks, I should calculate depreciation 5 times. Suppose no, I am talking about plant and machinery 15% block. I am talking about which block? Plant and machinery 15% block. Now in this plant and machinery 15%, opening WDV some amount they have given. Add additions. Additions means what? During this year I purchased some new asset. Which assets I should add in this block? Which assets purchased by me should be added in this block? Assuming this is a plant and machinery 15% block. Those plant and machineries which I purchased belonging to this block only should be added in this block. Agreed? Suppose during the year I purchased books. 40% is the block rate. Can I add in this block? No. In this block, what additions I purchased should be added? Only if I purchase any new plant and machinery, which will carry 15% rate of depreciation, because in this example I am talking about 15% rate, which carry 15% rate. If I newly purchase, that only additions will come. Sir, during the year, no, I purchased so many machines, sir, but they don't come under 15. Then additions value is 0. Sir, if additions no, divide them into 4 parts. What are they? Sir, I purchased, sir, asset is acquired, sir, but not installed. Keep that value. No, we'll keep the value, but we do not claim. Exactly, we will add it in the block. Only reason we didn't install it, but asset is purchased at rate belonging to this block. Do we purchase an asset? Yes, but the only point is we have not yet installed. So assets purchased but not installed, keep a separate value. Sir, I purchased asset, sir, but installed on or after 5th October. On or after 5th October. On or after 5th October I installed means, actually let us calculate, because no leap year, non-leap year there is a difference. Leap year, non-leap year there is a difference. So 4th October month, just calculator you take. October month, no, take 28 plus November 30, December 31, January 31, February 28, March 31, total it. 179, then 4th October. The answer is what? 4th October. 4th October to October 31st, how many days? 28 days. October 31 days. 1, 2, 3, leave it. Remaining how many days? Correct? No. 31 minus October 1, October 2, October 3, you take. How many days were there in the balance? 28. That's what I'm telling. Indirectly, if I install on October 3rd, see, very simple. October 4th onwards, if I install, what will happen? October 4th I installed, means 28 days I used. November 30, December 31, Jan 31, February 28, March 31, 179 days. If I install it on October 3rd, 180 days it will come. If I install it on October 2nd, 181 days. If I install before 4th October, on 3rd October or before 3rd October, the machinery is used for minimum 180 days. That's logic. If I install the machinery on October 4th onwards, obviously for that year that machine is used for less than 180 days. That machinery is used for less than how many days? 180 days. If I install it on 4th October. Suppose if it is leap year, 5th October is the criteria. That's it. If it is leap year, 5th October. Why? 5th October to 31st March, 179. In case of leap year, 4th October to 31st March will be 180 days. Non-leap year, 5th October. But for you, in exam problems will be based on 24-25. 2025 February month is a non-leap year. So need not worry. For you, for 2024 financial year based question papers, nothing but May 25 exam, November 25, sorry, May 25, September 25, Jan 26. Getting it? 2028, those who are entering, that time only again leap year comes. Are you getting it? So for you, you need not worry. For you, what is the date of installation which is important? 4th October. If asset you purchased is installed on 4th October or after 4th October, that asset is called as what? That asset is called as assets put to use for less than 180 days. Keep that value. Keep that value. Sir, I purchased 4 ACs, sir. 4 ACs installed on or after 4th October. Total 4 ACs cost. Add it here. Are you clear? Sir, I purchased few more assets, sir. Car I purchased 15 days. 15% related category. Car I purchased. But I purchased it on July month. Immediately ready to use. Car installation will be there. Will car be installed? No. The moment you purchase, it is ready for use. Yes or no? Directly it is more than or equal to 180 days. Here you mention the value. Now you see, block has an opening value. Yes or no? Whatever assets you purchased, you categorized into 3 categories. Assets purchased, but not at all installed in this year. Or assets purchased and installed where the installation date is 4th October or later than 4th October. Or assets purchased where the installation date is before 4th October. Or 4th point, you see, capital repairs incurred. Correct? Capital repairs incurred. Correct? Capital expenditure. Remember 30-31 plant and machinery. Sir, if I revenue expenditure is there, I can claim deduction, sir. What about capital expenditure? I told you there one point added to block. You see in 30-31, I added this point, capital repairs. You see capital repairs. Capital repairs are not deductible but are added to. Why? If you want to claim depreciation, you have to add it to. Exactly. Without adding to block, in income tax, can we claim depreciation? In order to claim depreciation, first that asset has to come under block. Add it to the block. Then only you can claim depreciation. Otherwise, you cannot claim depreciation. So capital expenditure must be added to block. Sir, I spent so much of capital expenditure on cars, sir. Let us assume we spent so much of capital expenditure on car. We did massive overhauling. There is a car, some 10 years happened it. 10 years before it was. Now what we did is, we replaced the entire seats, tires, everything we replaced. Getting it? We make sure the repair approximately costed 5 lakh, where the car is useful for another 10 years now. The repair cost enhanced the life of the asset, which means that's called as capital expenditure. Now that is also to be added here. If that capital expenditure is spent and where the asset life is enhanced, that enhancement date will be there na. If the date is 4th October or later than 4th October, then that is less than 180 days. Otherwise it is again more than 180. That much differentiation not required. Okay, in fact, this point itself you don't have in ICA book. This point which I don't know, addition, it is not there in ICA book. When they are drafting it, they didn't mention this, but it is there. It is important. It is added to block. On the depreciation will be claimed. Are you getting the point? So now you see. Now you see. What are they? Opening balance. Add additions during the year. Remember, in exam always you should write like this only. Fourth point you can leave it. From exam point of view, you can leave the fourth point. First 3 points you should write. You know, they will give you what they will give you. They will not tell you more than 180, less than 1. They will not tell you. They will tell you asset purchased, installed on which date. You should figure out whether it is more than 180 or less than 180. You should figure out. Understood. Fine. So opening is there, sir. Additions value totaled, sir. Now you will get some value, right? Now you will get some value, right? That value is called as what, you know? Gross value of the block. Somebody tomorrow asked you, what is gross value of the block or gross block value? What is that? What do you mean by gross block value? Opening plus additions during the year. That is called as what? Gross block value. Correct? Huh? But tell me, we only purchase assets. Huh? Don't we sell old assets? We sell old assets also. Money received. What is it? Money received in respect of any part of the block which is sold. Any part of the block which is sold or discarded as a scrap or demolished and destroyed. You know, when asset was demolished, you know, we got insurance money. Is it like something like sale or not? See, if I sell, I get money. See, at the end of the day, I am reducing here. For what I am reducing? Look, in the block loan, not only assets are added, some assets are deleted also. Why it is deleted? Either I sold it, or I discarded them, thrown away, or they were destroyed. At the end of the day, asset came out of the block or not? Is it destruction, sale, what reason doesn't matter. You have earlier 15 assets, now 14 only there. What about that one? Sold, discarded, destroyed, damaged, that and all doesn't matter. One asset is missing right now. A missing value, reduce it. How much you should reduce? Money received shall be reduced. On that asset, how much I should reduce? Money received. Here there is a difference between accounting and income tax. In income tax, no. In accounting, no. What I will do in accounting, no. Generally, suppose single asset is there. Single asset is there. Opening balance is, let us assume 10 lakh. Okay. Suppose on 1st October in that year, I sold this machine for 4 lakhs. I sold this machine for what price? 4 lakhs. You know that asset, no, this asset is carrying depreciation of 15%. This asset is carrying depreciation of 15%. How I will adjust this in the asset account, in the asset ledger? Opening values how much? 10 lakh minus depreciation up to September 30. Correct? Huh? How much it is? 10 lakhs multiplied by 15% into how many days divided by 365. Let us assume 6 months half, 75,000. What is the balance machinery value? 9.25 lakh. Yes or no? Now this 9.25 lakh asset is sold for what price? 4 lakh. How accounting entry I will write in accounts? Amount received is equal to 4 lakh. Yes or no? P&L account 5.5 lakh or 5.25 lakh to plant and machinery account 9.25 lakh. Correct? So here 9.25 will become, and naturally that asset ledger account will close. Correct? And the loss whatever is there we will transfer to P&L. Indirectly from the asset ledger account, do we reduce sale value or do we reduce written down value? 9.25 lakh we are writing off, no, that's nothing but what? After reducing depreciation, whatever value is there, that value we are writing off because the asset is sold. At what price you sold, is it relevant for the asset ledger account in books of accounts? But in income tax, you see, in income tax, if I sell an asset, in income tax, if I sell an asset, in fact, you see, they are not talking about money received on sale of asset. They are talking about money received on part of a block. They are not talking about any asset. See, that's what again I told you. Here, we do not calculate depreciation asset wise. We calculate depreciation block wise. We do not calculate depreciation asset wise. Sir, from the block, no, some assets is sold. We don't call it as asset sold in the block. We call it as part of a block sold. We call it as part of a block sold. Now tell me, when we are following depreciation, when we are calculating depreciation, values, everything block wise, asset wise, will I have any breakup? Asset wise, best example, 4 years before I purchased some 10 air conditioners. That time, no, I added in the block. I claimed depreciation, closing value came in the first year. Second year, I had added few more aces, deleted 1 or 2 aces, closing value came. Again, third year like that. Now I sold some 2 aces. Those 2 air conditioners related book value do I know? Because we don't maintain that information as per income tax law. Sir, but I have that information in account, sir. That is irrelevant for us. That is irrelevant. In your accounts, what you are doing, that's not my business. That is irrelevant for me. Under income tax, do you have information for asset wise breakup? No. Department is not bothered about it. What they tell you, you know, you added asset, you purchased asset, add in the block. You sold any asset, how much? See, you purchased asset, amount paid, add it. You sold asset, amount received, reduce it. Over. You paid some amount, add it. You reduced, you sold and got some money, reduce it. Simple logic. You are adding amount paid, you are also reducing amount received. Indirectly, in income tax, they are mainly focusing on amount only. They are not focusing how many assets are there in the block. 10 assets there are, 20 assets there are, 1 asset is there, doesn't matter. Block is there or not, they'll see. Is block is there. Block is there. 1 asset is there, that block is there. Value is there. No, you see, value is there. Fine. Then calculate depreciation. If there is a block and if there is a value, then you can calculate what? Depreciation. Value is there. What is meant by that value? After sale value. After sale, whatever value is that is called as value for depreciation. WDV before depreciation. Okay, don't worry. Until opening you understood. Gross block value logic until now you understood. From gross block value, definitely from this block some assets we will sell, no, because AC is becoming useless. Some issues might be there, we definitely sell them. Or might be AC fell down and damaged, but I have insurance, company paid me insurance money. Are you getting it? But at the end of the day, for part of a block item which was removed from the block, you got some money. That money received, no, reduce it directly. Reduce it directly. In exam, no, they will give you AC, no, it was sold. The AC book value 10,000 only, but we received 40,000. Many students, what they do, they reduce 10,000. That's wrong. You should reduce amount received only. You reduced amount received. For part of a block, you transferred either sale, discard, demolition, destroyed, you transferred part of a block. Reduce that amount. From gross block value, reduce it. Now you will get some value. On this value, you should calculate depreciation. Now you should calculate depreciation on this value. What is that value? That is called as written down value. Written down value as on the closing date. What is it called as? Written down value as on closing date. When the wordings used are written down value as on closing date, is it considered as before depreciation or after depreciation? Suppose in question they gave very clearly written down value as on 31st March after depreciation, then I will take it as after. If nothing is mentioned in the question, WDV as on 31st March 2024. WDV as on 31st March 2024 they gave. They are asking you to compute what is opening WDV as on 1/4/2024. Some students know what mind not there. 31st March same one, No. Written down value means in income tax before depreciation. Opening written down value means closing written down value minus depreciation of that year, then it will become opening written down value of the current year. So opening written down value as on 1st April is not closing written down value on 31st March. Agreed? All of you? In fact, opening, it's not a written down value, it's called as opening balance. Opening balance is different. Opening written down, opening balance is same way. Closing balance is different. Closing written down value is different. Agreed? Closing written down value means what? WDV as on 31st March. That value is before depreciation. You should compute depreciation. Now you should compute. You should compute what? Depreciation. You should compute depreciation on what value? On this value you should compute depreciation. You should compute depreciation on this value. Are you getting it, all of you? Until now. So you should compute depreciation on this closing WDV. Now from that, no, you less depreciation, you get the closing WDV of the block after depreciation. Actually here, no, before depreciation, after depreciation words, I used it intentionally. Getting it? But in the law, how it will be there, you know, written down value of the block, it will be there. How it will be there? Written down value of the block. Getting it? I will show you the act itself for your better idea. Computation, once we start now, it will be very interesting. There is a section called 43. Inside that, there is a subsection called 6. 43 subsection 6 is talking about block of asset format. You see here. Everybody see here. Written down value means what? In case of assets acquired in the previous year, nothing but in the current year, relevant year, actual cost. Correct? Suppose in case assets are acquired before previous year, then actual cost to the SSC less this is old provision. This one. In case of block of asset, in respect of any previous year, relevant assessment year commencing on or after, okay, well, that's fine. Written down value. Written down value means what? Written down value means, you see here, written down value means the aggregate of written down values of all the assets falling within the block at the beginning of the year, opening value adjusted. What they are adjusting? By increase. Increase means what? Add. What you should add? Actual cost of asset falling with the block acquired during the, that's what we added. Then reduce by reduction of money payable in respect of assets falling within the block sold, discarded. Instead of money payable, but we used what? Money receivable. Money payable by third party to us. Money payable by third party to us. Nothing but money received by us. That's what I translated. Reduce it. Correct? And that's it. You see, that's it. You see, so what is written down value definition? Opening plus additions minus money received on deletions. That's opening, that's WDV value. Did they consider depreciation in that? Exactly. Depreciation is computed on written down value. So which means if they say written down value as on 31st March, for example, generally what we understand that means it is before depreciation. In exam, they'll give you written down value as on 31st March is so and so. And current year SSC purchased submissions, they will give you. Calculate current year depreciation and closing balance, they will ask. What every student will do, you know, last year written down value they gave, they will take the opening. They will add additions. They will compute all the depreciation, entire amount wrong. Why? Because last year closing WDV, you should reduce depreciation of last year, then you should compute opening WDV, for that add additions, then minus amount received, then you will get depreciation. Correct? So every student, I did right answer, he will think. This is one mistake in depreciation, everybody do. Because they don't understand this. Are you clear? Written down value means understood. Now let's understand how to calculate depreciation. Now let's understand how to calculate. Now here in the bracket, no, I kept one point pending. Black letters, black words I wrote. Yes or no? This I will discuss in capital gains chapter. This I received in capital gains topic. This point I'll explain in capital gains topic. Now by the way, tell me, can the block value be negative? Can the block value be negative? It can never be. Block value can be either positive or maximum it can be. Exactly. That's what. Value of step 4 cannot exceed step 3. Step 4 means what? Less. This amount cannot exceed this, which means this value can be either 0 or positive. Correct? That's it. Now here, there is a link with capital gains provision. There is a link with capital gains provision. So we'll do one thing. Until now you understood. Once I will sum up what we discussed until now. In income tax, we claim depreciation not asset wise. We claim depreciation block wise. Block means what? Assets falling under same category and carrying same rate of depreciation is called as a block of asset. We have four categories: intangible, building, furniture, plant and machinery. Any asset that is not intangible, not building, not furniture is coming under plant and machinery. Now, if they carry same rate of depreciation, so all the assets coming under same category, carrying same rates, grouped together, and we will calculate depreciation on them together as a block. Correct? But a company which is engaged in power generation, in the first year they should decide. Will they go for SLM asset wise or will they go for block of asset WD? Suppose if they go for block of asset, whatever we are discussing, that is only applicable. Suppose if they want SLM basis asset wise, then for them no, depreciation rates I showed right, that is not applicable. Some other rates were there. For SLM basis, some other rates were given. Are you getting the point? That is not relevant for us, not there also for us. Are you getting it? Not that important, because most of them are following WDV only, everybody. SLM under income tax is not popular. By the way, SLM option is there only for which SSEs? Power generation undertakings. Normal SSEs, I am a service company, IT company, for me not available. I am a normal manufacturing company, not available. I am only liable for block of asset WDV approach. Now again, okay, how to calculate depreciation? First, opening value identify. What is opening value? Last year closing value after depreciation you should take. That is opening. Add. Did I purchase any asset in this block in the year? Check out. Yes sir, I purchased it sir. Is it installed? Not installed. Put a separate amount for it. Assets installed sir, but installed on or after 4th October, less than 180 days used. All the total, then put a total. Assets used for more than 180 or equal to 180, put one total. Total it. Now opening value plus assets acquired, total it. So you will get gross block value. From that, have you sold any asset in this block? Yes sir, I sold some 3 or 4 assets. I sold some assets sir. Okay, reduce that value. Now here I have one point. Sir, all the assets were sold sir. All the assets were sold. Will you get depreciation on that block for that year? You don't get. Simple in income tax, under block of asset approach, you can calculate depreciation if 2 conditions are there. If 2 conditions are satisfied only, you can calculate depreciation. 1, block must be there. To calculate depreciation, first asset must be there, block must be there. Block is there sir. Value must be there. Value is 0. Can you calculate? Exactly. Value must be there after. Value means what value? Exactly. Written down value. Value means written down value. There must be written down value in the block, and there must be a block. There must be an asset in the block. Asset must be there in the block, and there must be a written down value for the block. If these 2 conditions are satisfied, then only you can claim depreciation on that block. Any one condition failed, value is not there sir. Value is 0, or block itself is not there. Opening date block there, closing date block not there. You cannot claim depreciation for this year. But on that block, you have to compute capital gains. On that block, what you have to compute? Capital gains. Okay. Until now is one segment in depreciation. Okay. We almost discussed for 1 hour 10 minutes. Another 1.5 hour maximum. Depreciation is over. You know, people discuss this topic 5-6 hours and still students won't get clarity. It's because lack of structuredness in discussion. Able to understand? Clear until now? Yes, that's it. We'll take 5 minutes gap and then discuss. Yes, let's continue. Let's continue the discussion. As I already told, We understood until now regarding what is gross block value and how to reduce it, right? Now let's understand capital gains part. I have given regarding the same in capital gains also. First let me discuss the concept and then tell you. Now suppose sir, opening block value is, let us assume 10 lakhs, sir. Okay, we purchased assets additions, approximately 5 lakhs we purchased. Then we sold entire block. Some reason, maybe we don't want to continue the business, we are selling assets now. That entire block, what are all assets were there, no, every asset is sold. Total value of all the assets sold belonging to this block, how much 16 lakh. 16 lakh is the total. By the way, full block I sold, right? Will I get depreciation first of all? Getting it? I will never get depreciation. Since I don't get depreciation, what should I do? There is a section which says that, 32 versus section 50. 50 talks about capital gains on depreciable assets. 50 talks about capital gains on depreciable assets. Section 33 talks about depreciation. 32 talks about what? Depreciation. By the way, land and goodwill are not eligible for depreciation, correct? Land is not at all eligible. Building, goodwill is also not eligible. Yeah, fine. Anyhow, 32 versus 50. What section 50 says, What 50 says, if amount received on block. When I will get amount on a block? When I will get some amount from the block? When it is sold. Either full block sold, part of a block sold, keep it aside. Amount I received on a block. Suppose if it is more than gross block value. What is gross block value? Opening plus additions, correct? If amount received on a block is more than gross block value, that excess amount is there, right? Straight away treated as short-term capital gain. What is the tax rate for short-term capital gain? What is the short-term capital? What is the tax rate on short-term capital gain? 111A might apply. No, wrong. That is not. 111A is only for listed shares. 111A is only for listed shares. All that short-term capital gain tax rate is normal rates only. Normal rates means what? Individual and all slab rates. Companies and all flat 30%, that rate. That is normal rate, right? Special rate means what? Long-term capital gain 112 taxable at 12.5% after amendment, before amendment 20%. Long-term capital gain 112A before amendment 10%, after amendment 12.5%. Short-term capital gain 15% before amendment and after amendment 20% as 111A shares. This is normal short-term capital gain, not a 111A. Since there is no special rate for this, it is taxable at normal rates. The tax rate applicable for the SSE, that rate only it is applicable. When short-term capital gain I will get? If the amount received in respect of a block, is more than gross block value, is more than the value of the block, the excess amount is straight away treated as short-term capital gain and the block value will be reduced to 0. See, there is a fine. Again, let me be more clear in the example. You transferred, you sold, you got some money. You got some money from a block. Let us assume it is a case of sale, not insurance, destruction, demolition. It's a case of sale. You sold block. Full block you sold, part of a block you sold. This is first question you should see. Full block sold or part? Very simple. In exam, no, they will not tell you full block half. They will tell you 4 assets opening, additions 5 assets, deletions 3 assets. Part of a block sold, full block sold. Exactly. Part of a block is sold. Value they give. What is that? Value they give. Okay. Value they give. Full block they sold. Full block they sold. Full block. For example, Full block means what? Opening plus additions. Yes or no? So this is the gross block value. This is, let us assume 10 lakhs. Let us assume 10 lakhs. Let us assume gross block value is 10 lakhs. See, tell me in this table, no? In this table, no? Up to here, sale information is not relevant, correct? Opening plus additions. Up to gross block value, sale information is not relevant. Fine. So first I will do one thing. Opening plus additions is equal to gross block value is equal to 10 lakhs. Up to the sale information is not relevant. Now in the problem there is a sale information. Now when sale information is given, I should divide, I should apply my brain like this. Full block sold, part of a block sold. Sale information talks about full blocks sold or any assets on few assets only sold, check out. Sir, sale information in the problem, sale information is there. You see that all the assets were sold, sir. Then that comes under what? Full block. Oh, if full block is sold, sale proceeds or let us call it as amount received is more than gross block value. Gross block value 10 lakhs, sir, but I received more amount. So for example, 15 lakhs I received, sir. Gross block value 10 lakhs, sir. The difference is straight away short term capital gain 5 lakhs. Sir, amount I received, sir, but less than gross block value. Amount received is less than gross block value. Amount received is 8 lakhs, sir. Gross block value 10 lakhs. Balance is 2 lakhs. Loss. Short term capital loss. What is it treated as? Short term capital loss. Understood? Until now, easy or not? Now, is there a block here? Block itself is not there. Block itself is not there. Now, remember this word block itself is not there. Now, let's again come back to opening value and additions put together, sir, 10 lakhs, sir. Okay. Now, actually we sold some assets. But the number of assets we sold compared to the number of assets right now in the block, it is lesser. Assets number is less. You know what? Amount received for part of a block is more than gross block value itself. Full block value itself is 10 lakhs, sir, but I just sold 2 assets and I got 15 lakhs money. Part of a block I sold, sir, but how much amount is received? 15. Block value itself is 10, but you received how much? 15, but too not for the full block, only for part. That excess straight away is treated as what? Short term capital gain. Simple. That excess straight away treated as short term capital gain. But here block is there or not there? Block is still there. Now what is the block value right now? 0. I will make the block value to 0. Closing block value is 0. Next year opening block value is 0. Here also block is not there. But here can I call block value 0? Why? Here block itself is not there. But here part of a block only you sold, but block is still there. But the point is value is not there. What is value in our format? Sir, gross block value. Right now we are discussing 10 lakhs, sir. Part of a block is sold for 15, sir. Value is negative 5 lakhs. It can never be negative, no? Block value can never be negative, right? So what I will reduce? 10 only I will reduce. So block value will be balanced. 0. Block value can be balanced. 0 after amount received. After amount received cannot exceed, cannot be negative. It can only be 0. Sir, what about remaining 5 lakhs? I got 15 lakhs, no? But why you reduce to 10 lakhs? Because the value of the block is only 10. I cannot reduce from 10, 15. Maximum I can reduce only 10. Remaining 5, what is it? Go and tax it as short. It's a profit for you, na? More than your block value, you got money. Obviously, it's a profit. Part of full, leave it aside. Part of a block, full block, you keep it. Is that 5 lakhs profit or not? Yes or no? Straight away tax under short term capital gain. Clear until now? Now the question. Sir, part of a block is sold, sir, but 8 lakhs I got money. How much I got money? 8 lakhs. Part of a block I sold. How much I got money? 8 lakhs. Okay, let us come back to our table. What is the gross block value in our example? 10 lakh. Okay, 10 lakh is the gross block value. Part of a block only I sold for 8 lakh. How much is the balance value? Black is there. Block is there right now. Value is there. Calculate depreciation. What about 2 lakhs? Short term capital loss. No depreciation. No depreciation. Why? Sorry. Depreciation, no short-term capital gain, but only depreciation. Why? Sir, opening is there, additions is there, 10 lakhs value of the block we have, part of a block we sold, sir, 8 lakhs we received, sir. Okay, state off. Balance 2 lakhs we can depreciate. No. Yes or no? No question of short-term capital gain, short-term capital loss. Why I am not computing? Still value is there. When I can compute capital gains or capital loss, sir, block itself is not there, sir. Block itself is completely gone, sir. And I got 8 lakhs only for 10 lakhs worth, sir. Block itself is not there, sir. What about the 2 remaining minus? I have no, what I have to do with the 2? Then go and claim it as a short-term capital loss. I got money more than block value, sir. That excess money, tax it as short-term capital gain. Are you getting it? Sir, block is there. You know, after reducing some value is also there. No claim depreciation. No claim depreciation. That's it. Easy or not? Now tell me thumb rule. If full block is sold, will depreciation come? If part of a block is sold, short-term capital loss, will it come? Part of a block is sold, will short-term capital loss, either short-term capital gain or depreciation? Exactly. If full block is sold, either short-term capital gain, short-term capital loss. Fantastic. Are you clear? The same point we already even covered in just a minute. We even covered it in capital gains topic. I'll just show you. You see now. Section 50. What is this? You see? Transfer of depreciable assets forming part of block. Depreciable assets. Part of a block is amount received is more than gross block value, short-term capital gain. Correct? Sir, full block transferred. Amount received is more than gross block value, short-term capital gain. Amount received is less than, then it is a short-term capital loss. But you see, in a part of a block, short-term capital loss question itself is not there. Why? Because in part of a block, if I transfer, if I get an amount less than gross block value, still some value there, still block is there, value is there, you calculate depreciation. Correct? I gave thumb rules here. If full block is sold, either short-term capital gain or short-term capital loss, no question of depreciation. If part of a block is sold, either short-term capital gain or depreciation, no question of short-term capital loss. Easy. Fine. Now let's again continue. Sir, opening assets, sir, I purchased it for 10 lakhs. Opening is 10 lakhs. Sir, during the year I purchased it for another 10, sir. Total 20. Part of a block I sold for 10 lakhs, sir. Remaining value is how much? 10. This value is called as? Exactly. It's called as what? Written down value. Remember I told you. I even showed the act. In act also, opening value plus increased by reduced by. The value is called as what? Written down value. Now you should calculate depreciation. How to compute depreciation on the written down value? That we need to discuss now. Correct? All of you? Shall we do problem and then understand this? Yeah. We will do a problem on this and then understand. Do not look at the answer. At all. Okay? Only, actually, by the way, one more point I want to tell. We have depreciation again 2 types. Right now, I am actually discussing about something called normal depreciation. Manufacturing entities are eligible for some additional depreciation. Manufacturing entities are also are eligible for what? Additional depreciation. When you are computing depreciation, normal depreciation plus additional depreciation, both you should total. When you are computing depreciation, no, just a minute. You should compute both additional and normal. Just a minute. You see here, less depreciation, right? The next step is what? Less depreciation, correct? Depreciation, you see, working note 1. part number 1 normal depreciation, part number 2 additional depreciation. I will come back to additional depreciation later, little while later. First you compute, you take this information, compute normal depreciation and tell me. Compute normal depreciation and tell me. I will do one thing. Here computer is there, right? You ignore this point. On remaining you compute. Because computer is eligible for what rate? 40%. Remaining 3 assets you see here. Plant and machinery, they just gave. Which plant and machinery they didn't tell. If nothing is told in exam, what is the rate of plant and machinery? 15. Only 1, 2, 3. These 3 points information you take and tell me what is the depreciation. Only these 3 points information you take and tell me what is the depreciation. What is the depreciation on these 3 points? Actually easy. In this, sale is not there. Wait a minute, or else shall we do one more thing? Sale is there. That problem we will find. Just a minute. Ayyo. All are basic questions only. Wait, let me see whether in the illustrations or test your knowledge any sale data is given. 1 minute, I'll just see. Or else I'll do one thing. I will give you problem. Okay, that you compute. Okay, that you compute right now. Okay. Opening WDV on 1st April 2024. Okay, opening WDV 10 lakhs. Okay, this is first point. Now, plant and machinery purchased and installed. Purchased and installed on 10th September 2024. This is some 8 lakhs. How much it is? 8 lakhs. 3. Plant and machinery installed on 10th October 2024. This is some 6 lakhs. Then look at the information carefully and then start computing. Then actually opening they have 5 missions. Second time they purchased 2 missions. Third time they purchased how many missions? 2. Total rate of how many missions we have? 9 missions we have. Fine. Now here like fourth information, 5 plant and machineries were sold. Sold means what? Actually here amount I received. Actually amount received. How much amount received on these plant and machineries is approximately 9 lakhs. Approximately 9 lakhs. Okay. By the way, the block rate is what? Block rate is what? 15%. Tell me, assets purchased during the year more than 180, 15 I apply depreciation. Less than 180, 7.5% I apply indirectly. Opening value depreciation how much? 15 only. On opening value depreciation is always 15. Just remember this information. I want you to compute depreciation. Actually, I didn't explain yet depreciation. First, I want you to do a mistake. Then I want to explain. That's why. Compute depreciation. Right now, compute depreciation. Compute depreciation. I will do one thing. You have this book, right? You can use this this particular table. Part 1 is there, right? This logic you can use. This logic you can use. I also don't know the answer. This logic you can use. Okay. And then calculate depreciation accordingly. Read the sentence and then use and then calculate depreciation accordingly. Use our table given in the book, format given in the book, use it and then calculate. Just 1 minute time, 2 minutes time. Yeah, time up. How much is the answer? Have you used the format which I told? If you don't use that format, 99% you will get wrong answer. Use that format, there is a possibility you get a right answer. How much is the answer? Okay, tell me the answer. Okay, fine. Let me compute the answer. Then you tell me. Okay. I will apply the format as it is. See, I did not explain you at that logic format, but still I apply the format and compute answer. You see how it will come. Okay. Can I apply the format? Yes. What is the format actually? Once I will see, 1 second, I will clear everything. So what is opening value? Opening value is how much? Opening WDV 10 lakh, correct? As per this format, asset put to use for more than 180. How many assets we purchased like that? Oh, only 2 machines purchased and 2 are more than 180, correct? So add assets put to use for more than or equal to 180 days, correct? How much it is? 8 lakh. Plus again assets are there. Assets put to use for less than, how much is that? 6 lakhs, huh? Very good. Now how much is this? 24 lakh. What is this called as? Gross block value minus, as per the format, what I should reduce? Money received on sale. Part of a block sold, full block. Part of a block. Part of a block sold for what value? 9 lakh, which is less than gross block value. So we can still compute depreciation. Suppose what if that value is 90 lakh? No depreciation, moreover short term capital gain will come. Yeah, here money received on part of a block is, how much it is? Balance value. WDV block is how much? 15 lakh minus depreciation, correct? Working note 1. So working note 1, as per our book, working note 1, what it says? WDV of the block depreciation, how much it is? WDV of the block before depreciation is how much? You see here, working note 1, WDV of the block before depreciation, as per our given example, how much it is? 15 lakh. Okay. Now look at the table below. It says at last, this is second. Okay. This is first. Okay. First, no, 15 lakhs value is there, right? Allocate the value to assets bought but not used. Is there any asset purchased in the current year but not used? Is there any such? Zero. Which means value 15 lakhs is still there. Then second what you should do? Allocate to assets. Use it for less than 180 days. How much is there for less than 180? How much is there? 6 lakh, correct? After allocating 6 lakhs here, what is the balance value? Balancing figure, correct? How many of you have applied this allocation correctly by looking at this table? How many of you have allocated like this correctly? Very good, very good. Understood? I told you, that's why use this allocation table. It's okay, don't worry, I will explain you everything. Now I allocated, no? Now what are they saying? Apply half rate on this value to arrive depreciation. Half rate means what? 6 lakhs into 15% into 1 by 2. What is the depreciation? 45,000. Okay. Here 9 lakh into 15%. Almost 1 lakh 20. 1 lakh 35. 1 lakh 35,000. Correct? 1 lakh 35,000 is the value. Correct? Don't worry. First listen. Okay. I will tell you. I will explain everything. So how much is the total depreciation? So normal is equal to A plus B. B plus A is equal to how much? 1 lakh. How many of you got this answer correctly? 1 lakh 80. Fantastic. Very good. Now, what is the logic behind this? But tell me, even before I started explaining this, did you understand this format? How to allocate this value? See, up to here you know how to arrive. Only this computation you should know how to do. That computation also I gave simplified allocation table I gave you. You follow this allocation table, I am telling you, any type of problem you will get the answer. In the question, see, you should only be good at what? More than 180, less than 180. Opening value how much? Totaling you must do. That also calculator is helping you. Yes or no? Amount received only you should reduce. This value came. Now from this value, how to calculate depreciation? Stop applying your brain. Apply this. Getting it? Format, even without using the brain also you will get the answer. Now let's understand why this logic. Tell me, in this question, in our question right now, let us substitute those values. Opening value 10 lakh. Additions are approximately 15 lakh. Gross block value approximately, correct? 24. Okay, 14 lakh. And this is approximately 24. Amount received is gross block value 15 lakh, correct? Now here value available is 15. Now correct, 15. Correct, no? Yeah. Now first allocate to the value asset purchased but not used. That we are saying, this I will come back little while later. Then you should allocate what? Assets used for less than this value available, you should allocate to the assets used for less than 180. Why? Tell me, this value 15 lakhs, is it before sale or after sale? After amount received on part of a block, means after sale. Generally we sell newly purchased assets, old assets. Balance value available, is it belonging to new assets or old assets? Don't mug up. So logical, I'm asking. Some value is there. I sold. Sale value generally belonging to, logically tell me, sale value belonging to new assets or old assets. If any value still left, that is belonging to new assets. Correct? Generally they may belong to new assets. Value available after sale, no, if some value is there still, see, sale value belongs to old. After removing the sale value, if still some value is there, I should allocate that value. In this value, new asset value is there or old asset value is there? This is a question. In this value, which value will be there? Mostly 99% new assets, because I recently purchased. Definitely I have not sold them. Definitely we have not sold them. So therefore, after sale value, if some value is there, definitely it is majorly belonging to new assets. Now tell me, in our example, assets installed and used for less than 180, assets installed and used for more than 180, between these two, which is most new? Which is most new? Less than 180 days used is most new, because it is installed on or after 4th October. Simple. 4th October asset purchased, 4th October asset installed, is that new one? 4th October before asset installed, among these two, which is new one? Whichever is installed very late, whichever is installed recently, that is new. Now tell me, now opening plus purchases value minus sale value is there. See, sale value submissions they gave. I am not bothered about that what information. I think only one point. Sale value belongs to which assets? Generally, logically. Sale means obviously I would have sold old assets. So old assets. Balance value still there. This value generally belongs to how much is the new asset in our book? Most, we have actually 8 lakhs new asset is there, 6 lakh, both are there. But among these two, which is most new? 6 lakh. Oh, out of 15 lakhs, 6 lakhs is new. I will allocate on 6 lakhs, because since it is used for less than 180, I will claim only half. Now remaining value is there. Remaining value is how much? 9 lakh. This will contain more than 180 value, opening value put together. Now I am not differentiating more than 180 opening. I am not differentiating. Why? You know, because both of them carry 15% depreciation only. So directly, if any balancing figure is there, I am allocating here. Are you getting it? All of you. So now since out of 15, 6 lakhs is allocated for latest purchased assets, which are used for less than 180 days. I will claim which rate of depreciation? Half rate of depreciation. Still some value is there, then I will allocate here. Correct or not? You understood the logic until now? Now let's understand in a different way. One more example. Suppose let us assume sale value is 19 lakhs. Sale value is how much? 19 lakhs. Automatically below value comes sale value 19 lakhs means opening plus additions 24 minus sale value 19, part of a block only. Okay, balance value available is 5. Now how to calculate how much is the depreciation? I want you to compute and tell me. I want you to compute depreciation and tell me how much here it is the value? 5 lakh. Correct? How much is the depreciation? How much? 37,500. Okay, first I will see. First this value anyhow it is not there. So 5. Are here 6 lakhs is there? No. Here 6 lakhs, no, less than 180. But though 6 lakhs is there for the value of purchase, I have only how much value to claim depreciation? 5 lakhs. So I will allocate only 5 lakhs multiplied by 15 multiplied by half is equal to 37,500. What about balancing figure? Depreciation. Total depreciation. 37,500. You got it. Understood? Next time onwards, opening is given, additions are there, sale is there, up to value WDV every student will compute rightly. This allocation only majority will do wrong. Are you getting it? This allocation only majority will do wrong. Where to allocate on this value, how to calculate depreciation, because in the book also, I say book also, they don't give this much clearly. They will give computation. You brainstorm like anything, you don't understand. This is how you should. And I told you logic also. Sir, why we should allocate first for less than 180? I told you logic. Why? Because this value generally belongs to latest. Generally, logically. In exam, no, they might give you to confuse you. This value belongs to opening value. New assets purchased were sold during the year. That is irrelevant for us. The moment we added in block, the moment an asset is purchased and added in the block of asset method is applicable. Block of asset approach only applicable. Real information is irrelevant. Real information, I want only one thing. How much is the amount you paid for purchase? How much amount you received? When it is installed? Only this information all I want. Remaining information I don't want. Which asset purchased? Which asset sold? I don't look at asset wise. I look at block wise. Correct or not? Are you getting it? All of you. Suppose, you know, I sold this for 18 lakhs. I sold this for 18 lakhs. What is the value available balance? How much is the depreciation? How much? 6 lakhs is there. 6 lakhs I'll allocate here. How much it is? 45,000. Correct? Everybody? Yeah. Now let us do one more small adjustment. Okay. We purchased another machinery. We purchased another machinery. One machinery we purchased. We purchased another machinery. Not installed at all. Not installed at all. That value is 2 lakh. That value is 2 lakh. Now the sale value is 11 lakh. Now the sale value is what? 11 lakh. Now the sale value is what? 11 lakh. Now, see, same information. One more asset is purchased. Now the sale value is 11 lakh. Remember the information. Remember the information. Now come back here. I want you to compute depreciation and tell me. 1 lakh? I don't know. You just compute and tell me. Huh? 97,000? 1 lakh? Somebody got 1,50,000 answer. Somebody got 1,80,000. Yeah? If you apply shortcut, you will get wrong answer. Again, follow the process. Okay, fine. Can I do it? Okay, can I do it? Everybody now back. Time up. It's so easy. Opening value how much? Array 10 lakh. Assets acquired not installed 2 lakh. Assets acquired and used for less than 180 6 lakh. Assets acquired and used for more than 180 this one. Total additions 8 plus 2 10 16. Total is 26 lakh. Correct? Until now everybody computed rightly. Minus sale value how much? So what is the value? Now we will allocate 15 lakh here. Correct? Now out of 15 lakh, first 2 lakh I will allocate here. 2 lakh I will allocate here. What is the depreciation? Nil. Balance I have is how much? 13. How much I will allocate here? Less than 180 we have total amount 6 lakhs. Up to 6 lakhs we can allocate. Correct? Yes. Balance how much after allocating 6? 7 lakh. 7 lakh I'll allocate here. Now 6 lakh multiplied by 7.5%. 7 lakh multiplied by 15. 1 lakh 5,000 and 45,000. Total answer 1.5 lakh. Fantastic. Understood the logic? All of you? Clear? Now, continuation to this. Continuation to this. Same problem. Okay, be careful. I am giving you depreciation whole concepts. Now, this is completely information for 24-25. This is complete information for 24-25. Okay. Now, by the way, okay, you computed, right? So depreciation is how much? 1,50,000. 1.5 5 lakh, correct? 1.5 lakh. What is the closing balance? 13.5 lakh. Okay. So continuing this information, in 25-26, what happened? Do you know? That asset which is not installed, right? That is here also not installed as it is there. Yes, it is still not installed. That information remember. The asset which is mission 3 is there, right? Which is 2 lakhs, which is purchased in 24-25 is there, right? That is not even installed in the current year. That is not even installed in the current year. Okay, fine. Keep that information aside. In 25-26, what happened? You know, we purchased another plant and machinery. We purchased another plant and machinery. 3rd September 2025. When it is purchased? 3rd September 2025. Okay, so approximately some 4 lakhs we purchased. By the opening value, how much? 13,50,000 opening value. Okay, we computed. Everybody understood up to 13.5. Yeah, plant and machinery we purchased on 3rd September, which is again 4 lakh. Another plant and machinery we purchased, which is on 6th November 2025. Both are installed. Installed. See, sometimes in exam, no, they may not give you installation information. If nothing is mentioned, we assume that it is installed. Suppose no, they mentioned one point installed, another point purchased only. Then we assume that it is not installed. Suppose installation point itself is not there in the entire question. Purchases were there. 3-4 purchases were there. Installation they didn't talk. We generally assume that all were installed. 2 assets installed condition they gave. Another 2 assets they didn't mention installed. Then I assume that they only those 2 are installed. Remaining those 2 are not installed. I assume. Correct? Okay, fine. So another plant and machinery installed on 6th November, which is 5 lakh. How much it is? 5 lakh. Are you clear? Now in this year also, part of a block. In this year also, amount received on part of a block. Approximately 7 lakh. Approximately how much it is? Amount received is how much? 7 lakhs. Now I want you to compute depreciation. I want you to compute depreciation. Here I am going to tell you one extra point. In this, once solving is over, I will tell you one extra provision related point. Information is still clear. Format is same. Opening value 13.5, you know. Okay, last year asset we purchased, you know, that is not installed even in the current year. Current year we purchased 2 assets. What is the answer? 1 lakh? I don't know, even I have to compute. 1,72,000. Okay, can I? 1,65,000. Different answers we are getting. Okay, fine. I will compute. Okay. Okay. Time up. Okay. I will compute. Can I? What is opening WDB? Now you need to stop. 13,50,000. What is the additions during the year? More than or equal to 180 days. More than or equal to 180 days means 4 lakh. Correct? Everybody. Now less than or equal to 180 days. Less than 180 days. How much it is? What is the gross block value? 9 plus 23. 22 lakh 50,000. Correct? What is the amount received? How much it is? 7 lakh. Correct? What is the value balance? 15,50,000. This is the written down value. Correct? Minus depreciation. Working note 1. Correct? Now let's go back to our format. Okay? Let's go back to format. Now I will apply here. How much is the value right now? 15,50,000. First, allocate the value to the assets bought and not used. How much? 0. I'll tell you. You see, assets bought but not used means assets acquired during the current year but not used. Wait, assets acquired during the year but not used. During the year you must acquire the asset but not installed during the year. Last year it was acquired in that year only, not used, so 2 lakhs allocated there. But this year, is there any asset which we acquired during the year and not used? Is there any asset like that? No. First tell me this. Tell me first whatever question I'm asking. See, you are in your mind some doubt you will get. I will answer that. Wait for it. First for the question I'm asking, you answer. Okay. In this year, 25-26 year, we are solving problem. Did we purchase any asset? Yes. Is there any asset which we purchased not installed? No. So value is what? 0. Asset purchased not used, 0. Now remaining 50 lakh 50. Is there any asset which we purchased and used at less than 180? Yes. How much it is? Yes. Multiplied by 7.5%. Balancing figure 10 lakh 50,000 multiplied by 15%. How much is the answer? 1 lakh? Hey, 1 lakh 50 plus 1 lakh 57,500. Whereas here 37,500. Total depreciation 1 lakh 90,000. Somebody 1 lakh 95,000. How many of you got the right answer? Fantastic. 1 lakh 95. You applied same logic and got the answer. You applied same logic and got the answer. Very good. 1 lakh 95. Now immediately you might get a doubt. Sir, last year asset still not installed. No. Yes or no? Indirectly we claim depreciation. No, indirectly at 15%. Last year we purchased assets, sir. We have not installed this year, but we claimed indirectly, no depreciation. No, it is not installed. Condition violated. No. Asset acquired and installed. That condition will be only for first year. That condition is only for the first year in which asset is purchased. That condition is only for the first year in which asset is purchased. Second year onwards, what will happen? You know, it's a loophole in the law. In the second year onwards, what happened? It's a loophole in the law. Why it was a loophole? In the depreciation computation logic, they did not give importance to asset purchased last year but not installed. They missed that factor. Entire opening balance you claim full depreciation, they told. But our opening balance includes what? 2 lakhs worth of asset which we purchased last year but not installed. But in income tax, asset wise breakup not relevant, right? That is why even though opening balance includes one asset which is not installed, tell me, opening balance includes one asset which is not installed, but that value in the opening balance, how much it belongs to, we don't know. Honestly, yes or no? We don't know. We are logically allocating. Once it comes part of, very simple, any asset you purchased, in the next year it is going part of opening balance. It is going part of opening balance. Is it installed or not installed or used or not used, that doesn't matter. You will get full depreciation on that asset. Understood or not? All of you. So for calculating normal depreciation, assets purchased during this year and not installed, in this year I will not allocate depreciation on that. I will allocate first value to it and I will not claim any depreciation. But next year, even this asset is not installed, that doesn't matter. Why it doesn't matter? Because in the next year, this asset is forming part of opening block. Doesn't matter. The asset is formed part of group now. That asset don't have any identity now. Which assets will have identity? Assets which are purchased during that year will have a special identity. Assets which were purchased previous year, they don't have any identity in the current year. Understood or not? Once you purchased during the year and they were continued in the next year, they are all part of opening value. How much value in opening each asset, we don't know. We don't know. Opening value we don't interpret. It's a opening value, that's it. It's a block opening value, that's it. In that opening value, last year asset purchased, not used, that value is it. That and all irrelevant for us, because we follow block wise. Able to understand? All of you confident? So can you solve depreciation now? Anyway, it comes in exam. Yes, very good. Now this is normal depreciation computation. Right now, whatever we discussed is what? Normal depreciation computation. Now we have another depreciation called additional depreciation. We have another depreciation called additional depreciation. What is additional depreciation? You can see here. Before this only it is there. 32 subsection 1 clause 2a. 32 subsection 1 clause 2a. What is additional depreciation? You see, eligible SSE. SSE engaged in manufacturing, production or power generation. Only these three people are eligible. Now you see here, power generation is there, right? Power generation is there, right? For them, additional depreciation is allowed only if they choose block of asset method. Suppose if the power sector choose an SLM method, they only get normal depreciation, that too as per some different rates. They never get additional. Additional depreciation is only for the SSS who are following block of asset approach. That too, SSS must engage in manufacturing, production or power generation. Will an IT company get additional depreciation? Do an IT company get? It's a technology company, it's a service provider, they're not manufacturers. Who get additional depreciation? Manufacturers get additional depreciation, correct? Now, additional depreciation is available only if the SSE chooses. What about normal depreciation? Anybody will get. But additional depreciation is a benefit to promote manufacturing activities. Additional depreciation incentive. Tell me, if depreciation amount is more, my income under PGBP reduces. If my income reduces, naturally my tax amount reduces. So additional depreciation benefit or not? Exactly. But actually no. Okay, I'll come back to that point later. Time value of money factor is there here. I'll come back to it later. Okay, fine. Right now, additional depreciation is a benefit. Agreed? Yes. Now, in power, in case of power sector, additional depreciation is available only if they choose that one. Okay. Now remember, business of printing or printing and publishing, that is also treated as what? Manufacture. Suppose I am ordering now my income tax book, for example, to one vendor. Bulk we are ordering, for example. They manufacture, they print and then give us. Now they are purchasing some machineries and all, printing machineries. Will printing activity be treated as manufacturing activity? Yes. Printing activity is also treated as what? Manufacturing. Not only paper manufacturers, even printers also will get additional depreciation. So activity, business of printing or printing and publishing also amounts to manufacturing activity. So that is also treated as what? This one, taxman, publications. Have you heard of taxman? Yes or no? Some journals will be there, some publishers will be there, PGN like that. Some publishers will be there, they publish novels and all, they print and publish. For them, the business activity is treated as manufacturing. If they purchase any big printers and all, that is eligible for additional depreciation in addition to normal depreciation. Understood or not? Next, these manufacturers they get additional depreciation, right? On which assets? Only plant and machinery. Only assets that are falling under plant and machinery, other than second-hand machinery. Other than second-hand machinery, or if a manufacturer only purchased, sir, by the way, plant and machinery includes what? Computers, everything, right? Car is a plant and machinery, computer is a plant, everything is a plant and machinery, right? You will get additional depreciation only on those plant and machinery which is installed in manufacturing purpose. Car I purchased, did I use it for manufacturing process? I purchased ACs for my office. Of course, our factory has an office. In the office, we installed ACs. Is that eligible for additional depreciation? See, machinery installed in office, machinery installed in residential premises, office appliances, they are not eligible for additional depreciation because they are not used in manufacturing process. Which plant and machineries are eligible for additional depreciation? It must be new, it must be used in manufacturing process directly. Ships, aircrafts, road transport, do we use ship for manufacturing? Obviously no, right? Ship will use for manufacturing, aircraft will use for manufacturing. No, they are for transportation. They are for transportation. any machinery where 100% deduction, 100% depreciation is allowed under some provisions of the law. We have some expenses. Suppose there is an asset called, suppose if you buy an asset for scientific research, R&D activity. If you buy any asset for research and development, that asset comes under section 35 scope. That asset comes under 35. You can't claim depreciation on that. Why? Entire expenditure is allowed as deduction directly. Asset cost, sir, it's a capital expenditure. Yes, you will get deduction because you are using it for R&D, which is useful for the country's growth. Are you getting the point? If any asset is used for R&D, that is but scientific research. If you purchase any asset for scientific research, 100% deduction. Don't worry about, don't claim. Why depreciation? I am giving you deduction for expenditure itself, which is actually a benefit, Which is actually a benefit. Array, I want to invest in R&D and I want to bring a new product for the country. Getting it? But department, whatever amount I invest, see, best example, R&D companies, they will have very meager income initially. Initially, when I do R&D, they will have only a very small income. This year I got somehow 10 crore profit. But R&D I have invested 500 crore. Okay, or else 100 crore I invested. Or maybe let us assume some 20 crore I invested in R&D. You gave me depreciation 15%, 3 crore minus 7 crore into 30% tax rate. You are discouraging me. Yes or no? R&D I am generating profit. If at all this profit is there, what I will do? This profit I will invest and buy another asset. I'm an R&D. I am very much interested in doing research and development. But what tax is doing? Punishing them. That's why what they did. Don't worry, my dear. 10 crore, right? You purchased machinery, 20 crore you claim deduction. Now you have a business loss, not income. You have a PGBP head of income loss, not income. You claim entire 20 crore, no problem. Now in this way, if they are giving already cash I spent 20 crore. On that, if you give me depreciation only, what will happen? I will have a profit as per income tax law. I have to pay tax. If you give me 100% benefit on the capital expenditure, what I will get? I will result into loss. I will not pay tax to you. Happy? Correct or not? Anyhow, this I will discuss later. So any asset, any machinery on which 100% depreciation is allowed, that is not eligible for additional depreciation. Vehicles, ships, aircrafts, road transport vehicles, they are not eligible for additional. Machinery installed in office or residential, not related to manufacturing process, and office appliances, though they are coming within the definition of plant and machinery, they are not eligible for additional. And second hand machinery, which is not a new, before you somebody used it, you purchase it from them, that is not eligible. Easy or not? All of you. Now how much is the additional depreciation? How much is the additional depreciation? Additional depreciation is straight away actual cost identified. Actual cost means what? Purchase price, all that, into straight away 20% is equal to additional depreciation, is equal to additional depreciation. So you see 20% of the actual cost of what? New plant and machinery acquired and installed during the year. In the current year, installation is must. Suppose I didn't install, sir, you cannot claim additional depreciation. The next year I installed, sir, in that year you can claim additional depreciation. Logic is different from normal depreciation. Additional depreciation, we compute additional depreciation. We compute additional depreciation irrespective of this value. This value, what is this value? Written down value. Written down value is relevant only for what? Normal depreciation. For additional depreciation, what is the format? You see, additional depreciation, machinery B, acquired but not installed. What is the depreciation? 0. Machinery C, additional depreciation is what? Actual cost into 20. Remember, additional depreciation is percentage. You get percentage as a part of, as a proportion to actual cost. Additional depreciation rate you apply on what? Actual cost. Whereas normal depreciation you apply on what? Written down value. That is why, since normal depreciation is applied on written down value, getting it, value must be there. But additional depreciation is not like that. Additional depreciation you have to apply directly percentage on actual cost. Directly you have to apply on actual cost. Are you clear? All of you. Suppose no, sir, asset is installed, sir. Machinery, new machinery purchased, installed, sir. In this year only it is purchased and used for more than 180. Actual cost into 20. Suppose no, sir, I purchased another machine, sir, but in this year I used it for less than 180. Then additional depreciation is how much? Actual cost into 10%, because in this year you used only for less than 180. But benefit of giving additional depreciation is what? To promote you for manufacturing, no? Now I am indirectly punishing you by giving 10% for using less than 180. So what department is doing? Balance 10% of actual cost. No, you claim in the next year. What you have to do? You claim balance additional depreciation to be claimed in the next year. Suppose no, I bought asset last year, sir. In that year, no, less than 180 days I use it, sir. And I got additional depreciation 20 at 10 na. 10% of actual cost only they gave me, sir. I have another 10% eligibility. When I should claim the depreciation? Next year, nothing but current year. Last year 10% only if I claim. This year I can claim balance 10%. That's why you see the format itself I gave like this. Whenever you are writing in exam, no, part number 1, working note, part number 1, normal. You understood, you mastered it. Part number 2, very simple. Is there any asset purchased during the year? Yes, sir, it is there. Okay, not installed, 0. Is there any asset purchased and installed and used for more than 180? Yes, sir. Actual cost into 20. Is there any asset which is purchased and used for less than 180? Actual cost into 10. Last year, is there any asset purchased? Yes, it is there. Is it used for less than 180? Yes, it is used for less than 180. Then obviously last year, how much additional depreciation they would have claimed? 10. So balance 10 can be claimed? No. Actual cost into 10. Now remember, suppose here WDV value became 0 or negative, that doesn't matter. Additional depreciation is always based on, exactly. Are you getting the point? Additional depreciation is always based on actual cost. Able to understand? Additional depreciation is always based on actual cost. So total depreciation is how much? Part 1 normal depreciation plus part 2 additional depreciation. That's it. Are you confident? All of you? That's it. Now let's solve one problem on this. Now, illustration number 1. Illustration number 1. Can you? Now tell me, by the way, additional depreciation I purchased in current year, sir, but not installed. Will I get any depreciation? 0. Next year I installed. Next year I installed. Next year I installed. In next year I should see. I mean next year, no, if I install next year directly 20% you can claim. Directly you can claim 20% directly. Getting it? But in the next year, by the way, in the next year, no, I used it for less than 180. Then 10%. Up that time, balance 10% will be that next year. Year 1 I got asset, not installed, 0. Year 2 I installed and used it for less than 180, 10. Year 3 I will get balance 10. Year 1 I acquired and installed in year 1 only. Less than 180, 10. Year 2 it is 10. Year 1 only I acquired and installed, used it for more than 180. Then year 1 itself directly 20. Understood? Additional depreciation amount shall be computed irrespective of whether or not a normal depreciation is computed or not. Are you getting it? Additional depreciation is computed irrespective of whether normal depreciation is there or not. Clear? Illustration 1, please solve it. 1 minute time, 2 minutes time. Yeah, tell me one point. Suppose if I purchase a computer. On computer, will I get additional depreciation? You cannot say yes or no directly. You should ask first where the computer is installed. Is it installed in factory or is it installed in office? Sir, computer is installed in a office in a factory. Computer is installed in one office cabin, which is there in the factory, where factory manager will be working. Computer is there in the office. The office is there in the factory. Now tell me. No additional. Yes, additional depreciation will be there because that computer is directly used by the factory manager for updating all the production records, all that. Indirectly, he is using it directly for manufacturing purpose. Manufacturing records, everything is maintained in the system only. Now that computer is set to be used for manufacturing purpose. Are you clear? If at all, no link at all for manufacturing. no link at all. Generally it is not eligible, but this much they don't give you. Okay, sometimes they will give you computer is installed in factory for factory production purposes, then you will claim additional depreciation on that. If they specifically mention, you claim additional depreciation on that. Understood? Some computers we bought which are used to run the missions in the factory, additional depreciation eligible or not? Obviously. Are you getting the point? Some machineries and all can be run only through some systems. That system we purchase, that's actually a part of machinery, that is eligible. Correct? No, fine. So opening value, how much it is? 30 lakh. Remember, they have given the answer WDV as on 31st March after reducing. Yes, but anyhow, since opening value the word meant means, by default we assume that it's after reducing depreciation. Suppose no, here the problem is WDV on 31st March they said 30 lakhs. Then I assume that it is before depreciation. Suppose they clearly mentioned after depreciation, then it is after depreciation, opening value will also be same. Correct? Yeah, 30. New machinery, this put to use more than 180. 15th December less than 180. Computer installed, this is a different block. Correct? Different block. These three come under same block. 58 lakh. Correct? 58 lakh is the gross block value minus any amount received. 0. Nothing is given. Block is there, value is there. Correct? Depreciation first allocated for assets part but not installed. 0. Second you should allocate for less than 180 days. How much it is? 8 lakh. Balancing figure 50 lakh multiplied by 7.5% multiplied by 15%, 7.5 lakh, and here it is 60,000. So total it is, then computers is 3 lakhs multiplied by 15%. 40. Computers are eligible for what rate? 40. 3 lakh into 40, 1.2 lakh. Just a minute. Computers, 2nd January, less than 180, which means half only. Into half is equal to 60,000. Now, by the way, this is only normal depreciation. You are also eligible for additional depreciation you will get on the opening value. Only current year 20 lakh into 20%, 4 lakh. 8 lakh into 10% is 80,000. 4 lakh 80,000 is additional depreciation. How many of you have computed correctly? Correct? No? Yes, very good, very good. So you see here, so normal depreciation directly they computed, where we got already this, 8 lakh 10,000. Correct? On 40% block 60,000. Additional depreciation 4 lakhs 8 lakhs. Total depreciation on plant and machinery block is 12 lakh 90. Total depreciation on 40% block is 60,000, because 40% block is not eligible for additional because it is installed in office. That's it. Easy or not? Almost over depreciation. Almost over. Now we have still few more problems. Okay, we will solve it. We will solve few more problems for there. Now, okay, fine. Major depreciation concept is over. Remaining some parts are pending. Still 1.5 hours it will take. But major part this only. That is also important. Remaining part also important, because in the last January 25 exam, they asked this question. They asked a question on this. Explanation 2. They asked on this. Explanation 5 they tested indirectly. Explanation 1. They asked these 3 questions for 3 marks or 4 marks. They gave 1 mark each. Descriptive. So depreciation, every topic is important. We can't leave anything. Okay, but main depreciation computation part we understood. Clear all of you? So we'll take a 5 minutes gap and then continue. By the way, until now this 2 hours is there, right? This I'm going to upload it as a demo also. Okay, you can also use it if at all any of you missed it. But next part onwards I will not upload. That's it. Clear until now?